A bank branch operates through a sequence of interconnected activities that together form the complete operational workflow. Mapping this workflow means clearly understanding how a transaction or customer request travels from the moment it enters the branch until it is finally recorded, verified, and reported. The life cycle often begins with account opening, where customer identification, documentation verification, and system entry take place. Once an account becomes active, routine transactions such as deposits and withdrawals begin to occur. Each transaction follows defined procedures that include document verification, transaction recording in the system, and generation of transaction evidence for both the customer and the bank. Workflow mapping ensures that every operational step is visible and traceable. For example, when a customer deposits cash, the teller accepts the funds, verifies the denomination, records the transaction in the banking system, and provides a receipt. The transaction is later included in the branch's daily balancing process. If these steps are clearly mapped, operational gaps become easier to detect. Without workflow clarity, errors such as unrecorded transactions, delayed postings, or incorrect balances may arise, affecting both operational efficiency and internal control reliability. Operational workflow mapping is not only about listing activities, but also about understanding responsibility, control checkpoints, and reporting flows. Every branch transaction eventually connects to reconciliation and reporting processes. At the end of each working day, branches reconcile cash balances, verify system totals, and prepare operational reports that are sent to regional or central offices. These reports ensure that all transactions processed during the day are accurately reflected in the bank's financial records. A real operational example occurred in an Indian public sector bank, where a branch faced repeated cash balancing differences. After management mapped the full workflow, they discovered that deposits received near closing time were sometimes recorded after the teller reconciliation process had already started. By redesigning the workflow and establishing a strict cutoff time for transaction entry before reconciliation, the discrepancies were eliminated. This case illustrates why workflow visibility is critical. When every step from customer request to final reporting is clearly mapped, branches operate with stronger discipline, fewer operational risks, and improved accountability across staff members responsible for different stages of the banking process.